Okay, so let's have a look at what we have this morning in the markets. So just a very brief reminder, the long-term daily chart in the ES, and I've got, whatever the count, the 4's here, the 1 up is here, and the 2 back there. Then it's a case of this, which has been challenging, shall we say. And we've reached this 1.0 extension. So we're at the point where the next couple of parts of the move will reveal to us whether we are still in an impulse and we're going to go to our original targets in excess of 3,200. I'm actually looking for 33 something in the S&P 500, or whether we're going to morph into a diagonal and we're only going to get to around the 3,100 level. So if I come down the time frames and look at the 4-hour chart, okay, and there's the original 1, 2, and that's fine. The only way to consider this as an impulse, we took this out here, is that all of this is the 1 and that we are now in the 2 back against it. That's the only count that makes that sensibly is credible for a continued impulse higher. And if that's the case, then the low that we saw yesterday just was spiked underneath this 50% retrace level of all of this move up, and we started to reverse yesterday afternoon. We've got an A, B, C completed into that, and therefore I'm expecting a move up next in any event. Having said that, you know, I can, this last part of the move down, if I just go to the hourly chart, is really messy, horrible stuff. All of this is god awful. Ergo, it's very difficult to be definitive and rely on this as absolute. It is not inconceivable that we can drop down today again to 28.57 in the ES. It's not really what I'm expecting after the bounce we got yesterday, but just be aware of it. But on the basis that this is a local low of some description, it can either be the 2 of 3, it can be the A wave of the 2 of the 3, or it can be the A wave of a 4 in the diagonal count. So it's the next move up followed by the pullback from it that will give us the information that we need for the next few months, in actual fact. So this resistance zone, on the basis that we hold around the pre-market low, I'm looking for 28.72 to hold, which is the 764, 786 retrace of the move up that we saw yesterday afternoon after we reached some sort of support. And I'm looking for it to take out the high from yesterday at 28.94. Then we need to watch these here, okay? 50%, 61%, 764 at 29.06, 29.16, 29.27, 28 area. If we can clear that, okay, and bear in mind, we should do, if this is a 2, we should clear this, because we've got a 1 up, this would be the 2 back, we'll get another 1, 2, and the 3 of 3 should simply take it all out, and in fact come up and take this out at the same time. If we see that, the count's crystal clear, the impulse is intact, and the 2 is in. The next possibility is that we come up and hit one of these retrace fibs, and the structure of this next move up and the Fibonacci extensions which it hits and holds as we climb our way up the ladder, so to speak, will tell us in advance whether that's likely. But supposing we hit one of them and then start to come down sharply, it leaves 2 possibilities, which is that this is the A wave of 2, this is the B wave of 2, and we're going to come down to one of these 2 levels here, 28.57 or 28.36. And again, depending on where we hit here, we can take another Fibonacci projection, length of the A off the B, look at the 1.0 and 138.2, and it should give us an idea of which one of these and or whether either of these are going to hold. Because if they don't hold, then we are likely going to 28.15 or lower, and on that basis we are in the C of 4 in the diagonal count, and I would revert then to the diagonal count for the S&P 500 and quite possibly the Nasdaq ongoing from here. Doesn't mean we're not going to go higher. We're going to still see a fairly substantial new high. Doesn't mean our stock positions are invalid, because just because this is in a diagonal does not mean that they're all going to morph into diagonals. But it does mean we need to do two things. We need to pay far, far closer attention to anything that we're holding on the long side, and we need to get out earlier, because when a diagonal completes, it reverts to its origin rapidly. And in the case of the ES, that origin is the February lows down here, and we are going to see 500 points come off the S&P 500 in no time whatsoever if this move completes as an ending diagonal. And I don't personally, for the sake of an extra 10 or 15% on a few stocks and ETFs, want to be anywhere near that. Okay, so there's the game plan ongoing. From a day trading perspective today, we've got a 1 or A up, a 2 or B back, and we're bouncing fairly strongly at the moment we've come underneath the 618 and not got to the 764. So if you took a long this morning off here, great, but make sure you protect it now. If you haven't, I'd wait till after the open. We may well get a pullback. We may even come down and hit this lower fib before we go up. But I'm looking potentially up this morning, certainly while we're over 28.72.5 in the ES.